Hello traders and greetings to the NinZa family. Welcome to today's webinar. It has been quite a while since we last gathered to share and exchange effective trading strategies. Today, I am bringing you a topic that many traders are passionate about, which is momentum. This is a core concept in technical analysis, and when understood correctly, it can help you capture high probability trading opportunities. Momentum is often represented visually through histogram bars on the chart, most commonly seen in indicators like the MACD histogram or variations of volume oscillators. However, the key question is not simply about seeing momentum, but rather how to use momentum effectively in trading. Typically, when traders see a strong surge in momentum, they tend to jump into a trade immediately. And then what happens? The market reverses, momentum fades, and the trade hits stop loss quickly. This is one of the most common mistakes traders make. So, do you want your trade to look like this? Like this? Like this? And like this? And from that very idea, Zenith X was born, a momentum-based trading system. Without wasting your time, let's dive straight into the first part, the core components of the system. Here, we'll take a deep and detailed look at what the system includes and how it can support you in your trading journey. First, we have the trend initiation signal. In this case, it indicates the beginning of a bullish trend. This is also one of the unique aspects of the system. How it identifies a trend is something we'll explore in greater detail later on. After the bullish trend has been confirmed, the system looks for a pullback signal. This represents a potential trend-following entry and is also the system's primary trade setup. Next is the signal indicating that the trend is gaining strength, represented by a 5-pointed star icon. At the bottom, you'll see a series of histograms. This is the momentum data that the system analyzes and displays directly on the chart, allowing you to monitor the strength of a trend and also serving as a basis for generating trade signals. And we have a trend slowdown signal. This is a warning that the previous bullish trend is weakening or maybe reversing. Note that this is only a warning signal, so it does not guarantee that the market will reverse immediately after it appears. Similarly, when a downtrend occurs, the marker turns pink, and the system starts looking for a sell signal. We also get a warning signal indicating that the bearish momentum is strengthening. During a downtrend, the histogram analysis takes place above the price. Next, we'll take a closer look at how the system identifies market trends. Here, we'll dive into the mechanism the system uses to generate trend signals. In Zenith X, the trend identification mechanism is based on two key components: the moving average crossover and multi-timeframe momentum analysis. Within the system's parameter section, you'll find two parameters: MA fast period and MA slow period. These allow you to define the periods for the two MAs that the system uses to determine the market trend. As specified in the parameters, we've set the fast period to 10 and the slow period to 50. Based on these values, the system will automatically calculate the trend signal using the crossover between the two moving averages. I'll add these MAs to the chart so you can better understand how they work. On the chart, you can see that when the market shifts into an uptrend, the fast MA crosses above the slow MA. However, for the system to confirm it as a valid uptrend, there's an additional condition. Momentum on the higher time frame must also be rising strongly. This means that even if a moving average crossover occurs, the system still performs a hidden multi-timeframe momentum validation. As a result, you can avoid false signals during choppy market conditions when MAs cross frequently without a clear trend. During an uptrend, the trend plot is displayed in green and moves along with price action throughout the trend development. Its role is highly important, and I will explain it in more detail in the trading guide section later on. Throughout the price movement, the system continuously analyzes the market to detect acceleration phases. This allows it to identify moments when bullish momentum is strengthening. When the market gains significant momentum, a warning signal will be displayed directly on the chart. Throughout the price movement, the system continuously analyzes the market to detect acceleration phases. This allows it to identify moments when bullish momentum is strengthening. When the market gains significant momentum, a warning signal will be displayed directly on the chart. When momentum begins to slow, it serves as an early indication that the current trend may be losing strength. This doesn't necessarily mean an immediate reversal, but it often marks a transition into a phase of market hesitation, where both buyers and sellers are watching rather than acting decisively. During this stage, entering new trades in the direction of the existing trend becomes riskier as the probability of strong follow-through decreases significantly. Instead, it's often wiser to tighten your profit targets, trail your stop closer to lock-in gains, or simply stay on the sidelines. Weak momentum can still allow for minor price moves, but rarely with the strength required to reach larger, predefined targets. Recognizing this loss of momentum helps you avoid chasing the tail end of a trend, where the reward is no longer worth the risk. Conversely, in a downtrend, the system requires two core conditions to confirm that the market is truly shifting downward. First, the fast MA must cross below the slow MA, a basic but important technical signal indicating that selling pressure is starting to dominate. Second, bearish momentum on the higher time frame must be clearly present, reflecting a strong weakening of buying interest. When both of these conditions are met simultaneously, the system confirms a bearish trend and generates a corresponding signal, enabling traders to align their decisions with the prevailing market direction. Similarly, once a downtrend is confirmed, the system focuses solely on identifying short-term retracements against the trend and waits for a pullback signal to form. At these points, if the system also detects strong, bearish momentum forming right on the signal candle, it will issue a confirmation alert. This combination of a retracement and a surge in selling pressure precisely at the entry point gives you stronger confidence to enter a short trade with a higher probability of success. Similarly, when the trend slowdown signal appears, it serves as a warning that the downtrend may be nearing its end or losing strength. This suggests that selling pressure is fading and the market may be preparing for a potential reversal. And this is the important part, one that I believe many of you have been wondering about. How do we know which time frame the system uses to calculate momentum for identifying the trend? The answer lies entirely in a single parameter called trend term. Here's how it works. The system takes your current time frame and multiplies it by the trend term value to simulate a broader trend structure. The default multiplier is 5. For example, If you're trading on a 100-tick chart and set the trend term to 1, the system will internally simulate the trend based on a time frame that is 5 times larger. In this case, a 500-tick chart. That means all momentum and trend calculations will be aligned with what the market would look like if you were analyzing it on a 500-tick chart, even though you're still trading on a 100-tick. If you increase the trend term to 2, the system will simulate the trend using a 1,000-tick perspective, 100-tick x 5x2. This allows the system to project the dominant trend from a much broader context, helping you trade in the direction of the higher time frame without ever leaving your current chart. Next, within the system settings, you can enable trend color visualization. Once this feature is activated, you'll be able to easily identify different phases of the trend through clearly coded colors displayed directly on the chart. Here, you can clearly observe that when an uptrend begins to form, the chart background turns green. This color indicates that a bullish crossover between the two MAs has occurred, and that upward momentum on the higher time frame has also been confirmed. And when the background color stops rendering, it indicates that the alignment between the MA crossover and higher time frame momentum no longer exists. In other words, the system no longer confirms the uptrend, signaling that the market is weakening or entering a non-trending phase. When the background color reappears, it indicates that the MA crossover and higher time frame momentum have started to align once again. This suggests that the trend is being reestablished and the market is likely to resume moving in the direction of the prevailing trend. Similarly, when the background turns pink, it indicates that the MA crossover and higher time frame momentum are aligned in the bearish direction. This confirms that a downtrend. Similarly, when the pink background disappears, it signals that the alignment between the MA crossover and higher time frame momentum is no longer present. In other words, the system no longer confirms the downtrend, indicating that bearish momentum is weakening. Thanks to this mechanism, we can often avoid trading during sideways market conditions, which are typically noisy and high risk. When the pink background reappears, it indicates that the alignment between the MA crossover and higher time frame momentum has returned. The downtrend is once again confirmed, suggesting that bearish momentum is strengthening and the market is likely to continue moving downward. Next, we'll move on to the section on zones and signals, one of the most critical components of the system. Here, you can see that each cluster of histograms is accompanied by a bar that reflects the current trend and indicates the moment when a trade signal may occur. When these bars are shown in bold color, that marks the moment, as I mentioned earlier, when the MA crossover and higher time frame momentum are aligned in the bearish direction. Only at these points does the system propose a trade signal. This ensures that every signal is backed by multi-timeframe confirmation, rather than being triggered by isolated short-term price fluctuations. When this bar turns lighter in color, it indicates, just like the scenario mentioned earlier, that the MA crossover and higher timeframe momentum are no longer aligned in the bearish direction. In this case, the system will not propose any trade signals, helping you avoid entries during moments when market conditions lack clarity or sufficient confirmation. So, within a confirmed trend, simply looking at this bar allows you to instantly identify where the system is proposing a trade signal. It's a clear and efficient way to track how the system behaves without needing to manually reanalyze the entire market data. Next, let's move on to the signal mechanism. The system offers two main signal modes. The first is sensitive mode. This mode allows you to detect trade signals earlier in the trend. It's ideal for traders who prefer a more proactive approach and want to catch market movements from the very beginning of a directional move. When the system searches for trade signals, it is closely tied to the gray-colored MA displayed on the chart. This moving average plays a crucial role as a reference zone for identifying retracement phases, temporary pullbacks within a trend where valid trade signals are likely to emerge. The first step in the system's signal detection process is to identify the hit bar. A hit bar is a candle where the price has just touched or crossed a key reference level, typically the gray moving average. This candle is marked directly on the chart and acts as the starting point for the system to evaluate a potential trade signal. In a downtrend, when a green candle with a full body appears entirely above the fast MA, the system initiates the process of identifying the hit bar. In this case, the hit bar is defined as the green candle that has its full body above the fast MA and also has the highest high among all qualifying candles. This candle is marked by the system as the starting point for evaluating a potential pullback signal in alignment with the downtrend. In this mode, the pullback signal candle is the candle that appears immediately next to the hit bar and must be a red candle with a large body. The body size threshold is clearly defined in the system's settings, ensuring that only sufficiently strong pullbacks are considered valid trade signals. Importantly, a sell signal is only triggered when the histogram turns green. This indicates that the market is in a pullback phase within a downtrend. This mechanism gives you a clear advantage. It allows you to capture early entries at the very beginning of the pullback, rather than reacting late after the correction has already played out. Next, a trade signal is only proposed when the downtrend still maintains strong momentum. This ensures that sell signals are only generated when selling pressure is clearly dominant and not during the weak or indecisive market phases. As a result, you can avoid counter-trend trades or getting caught in low-probability sideways conditions. Similarly, any subsequent pullback signals must meet the same strict conditions. Specifically, the system must detect a hit bar with a full body entirely above the MA and with the highest high among the qualifying candles. At the same time, the histogram must turn green, confirming a retracement is in progress, but the overall market must still maintain strong bearish momentum. Only when all of these conditions are met will the system propose a sell signal. And when the system detects that momentum has weakened, it will immediately stop searching for signals. This helps eliminate weak setups and prevents entries during periods when the market lacks conviction or is losing its directional bias. Likewise, in an uptrend, the system only proposes a pullback signal when all critical technical conditions are met. First, it must identify a hit bar, a candle with a full body entirely below the gray moving average, indicating a minor retracement against the dominant trend. Among all qualifying candles, the system selects the one with the lowest low as the hit bar, signaling the point of maximum downside pressure within that correction. Next, the histogram must turn pink, meaning the system has recognized a temporary pullback phase. However, to ensure high probability setups, the system will only proceed if upward momentum on the higher time frame remains strong. When these three conditions align, a valid hit bar, a pink histogram, and confirmed bullish momentum, the buy signal is officially proposed. This mechanism filters out weak or noisy retracements and focuses only on high-quality entries that align with the dominant trend, giving traders a clear tactical advantage. In an uptrend, when the system detects that momentum is no longer strong enough, it will immediately stop searching for trade signals. This prevents buy signals from being triggered during weak, indecisive, or potentially reversing market conditions. As a result, the system focuses only on high probability setups where both trend and momentum are clearly aligned. In sensitive disable mode, the system requires stronger price action confirmation before proposing a signal. This means signals won't appear immediately, but only when sufficient market structure is present to justify a high probability setup. When this mode is turned off, a new parameter appears in the settings. Signal pullback finding period. This parameter defines the maximum number of candles the system will monitor after the hit bar is identified to find a qualifying signal candle. So, what exactly are the conditions for a valid signal candle in this context? Let's break it down through a concrete example. First, all core conditions for a trade signal in sensitive disable mode remain the same as in sensitive mode. Confirmed trend, correct histogram color, strong momentum, and a valid hit bar. However, there is one key additional condition in this mode. The buy signal candle must be a bullish candle that breaks above the high of the hit bar. If no such breakout occurs within the number of candles specified in the signal pullback finding period, the system will not propose a signal. Instead, it will reset the process and start searching for a new hit bar. This mechanism ensures that signals are only generated when there is clear price action confirmation, improving signal quality and reducing the likelihood of reacting to weak or indecisive pullbacks. Similarly, in this case, after the hit bar is identified, the system continues monitoring the following candles within the range defined by the signal pullback finding period. Specifically, it is on the third candle after the hit bar that price breaks above the hit bar's high. As a result, this third candle meets the criteria for a valid signal, and the system will officially propose a buy entry at that point. In a downtrend, the system uses a similar process to identify a sell signal. After detecting the hit bar, a green candle with its body above the fast MA and the lowest low, it monitors the next few candles within the signal pullback finding period. A valid sell signal is only proposed if a candle breaks below the hit bar's low during this period. This confirms selling pressure has resumed. If no breakout occurs, the system discards the setup and starts searching for a new hit bar. This ensures signals are only generated when price action confirms trend continuation. Another key feature of the system is its ability to help you quickly distinguish between strong and weak momentum signals, using the style of the signal line displayed directly on the chart. Signals that appear at the beginning of a new trend or right after a trend. Strengthening alert are considered high momentum signals, since they occur when the market is entering an acceleration phase. These are typically the most favorable entry points, as both trend direction and momentum are aligned. To make them stand out, the system draws the signal line in a bold style indicating a stronger conviction behind the move. In contrast, when a signal shows up after a trend slowdown alert, it is labeled as a low momentum signal. This means the market is likely losing strength, and a possible reversal or sideways phase may follow. In these cases, the system displays the signal line in a thinner format, visually indicating a weaker setup that may require more caution. This visual distinction allows you to assess the quality of each signal at a glance, helping you prioritize stronger opportunities and avoid chasing trades in weak or late-stage trends. Similarly, during a downtrend, sell signals that appear early, especially those that show up near the beginning of the trend or shortly after a trend strengthening signal, are displayed with a thicker line. This visual cue indicates stronger momentum and a higher quality entry point. In these cases, you can consider setting a wider stop loss and a larger target to take full advantage of the trend's potential strength and direction. In contrast, when sell signals are displayed with a thinner line, it typically means the signal has occurred after a trend slowdown indication. This suggests that the trend may be weakening or reaching its later phase. As a result, these signals carry more risk and should be approached with greater caution, possibly using tighter stop and target levels. Recognizing these visual differences can help you better time your entries and adapt your trade management based on the strength and stage of the trend. Next, we'll move on to the system's trade management capabilities. As mentioned at the beginning of the video, Trend Plot is designed to show you where to place your stop each time you enter a trade. That's why it extends throughout the entire trend, so you can identify your stop level no matter when you enter. For example, when entering a sell trade, we can initially place the stop loss at the trend plot level and adjust it gradually by trailing it as the trend plot moves. Until the yellow trailing stop line appears as shown on the chart, it signals that it's time to begin adjusting your stop loss with the trend. Before this point, your stop remains anchored at the trend plot for safety. But once the yellow trailing stop is activated, it automatically updates based on price movement, and you should start trailing your stop along that line to lock in potential profits. The key feature of this trailing stop line is that it only appears when the market shows strong momentum. This ensures you begin trailing your stop only when the trend is clear and has solid follow-through. Thanks to this logic, you'll avoid getting stopped out prematurely during weak or choppy market phases. The system activates the trailing stop only when sufficient momentum is present, allowing you to stay in strong moves longer and avoid unnecessary exits during low energy periods. Similarly, when entering a buy trade, we initially place the stop at the trend plot. Later, once the trailing stop appears, specifically the white trailing line that you can see on the screen, we begin to adjust the stop loss according to that line instead. This approach has an additional advantage. It allows you to optimize the reward on each trade more effectively rather than trailing the stop based on the trend plot for too long. You can also attach the trailing stop line to your stop order, allowing the system to automatically adjust your stop loss when necessary. With this feature, there's no need for manual tracking. The system will monitor the trailing stop line in real time and automatically update your stop level, helping you protect your profits efficiently without missing any key market moves. We'll move on to building an automated strategy, one that handles both trade entries and ATM automatically. To begin, we'll be using Captain Optimus Strong, a powerful tool designed to help you build automated trading strategies. This system allows you to add one or multiple indicators or even full trading systems and combine them to create automated entry logic. Step 2 is to add the Zenith X system into Captain Optimus Strong. At this stage, it's important to select the correct encoded signal values that you want Captain to use for automated entries. Specifically in the Zenith X system, the pullback buy signal is encoded as 4, the pullback sell signal is encoded as 4. Make sure to input these values correctly when setting up your entry logic, as they are the key triggers for Captain to recognize and execute trades based on the Zenith X strategy. Next, configure your desired Zenith X settings inside Captain Optimus Strong. Important note, the settings you apply for Zenith X within Captain must exactly match the configuration you're using on the chart. This ensures that Captain will recognize and execute trades precisely at the points where the Zenith X system actually issues signals. Keeping the settings synchronized is crucial, especially if you've customized parameters like MA periods, trend term, or signal modes. Double-check to make sure every value in Captain matches the settings on your chart. Next, to keep the chart clean and easy to follow, we'll turn off the signal display from Zenith X and only show the signals generated by Captain Optimus Strong, COS. This allows you to clearly see the actual entry points triggered by COS and verify whether it's correctly detecting and aligning with Zenith X signals, without overlapping visuals or unnecessary distractions. Next, to keep the chart clean and easy to follow, we'll turn off the signal display from Zenith X and only show the signals generated by Captain Optimus Strong, COS. This allows you to clearly see the actual entry points triggered by COS and verify whether it's correctly detecting and aligning with Zenith X signals, without overlapping visuals or unnecessary distractions. Next, let's take a moment to explore a showcase that illustrates how this strategy performs in real-time conditions. In this demonstration, you'll see how Captain Optimus Strong, in combination with Zenith X, handles a full trade cycle, from detecting a pullback signal, placing an entry at the right moment, to activating a fully automated trade management system once the position is live. What makes this particularly powerful is the integration of an ATR Trade Shield through Zenith X, allowing stop-loss, target, and trailing adjustments to be dynamically managed based on market volatility, without any manual intervention. The entire system works seamlessly to deliver not just precision in trade entries, but also adaptive risk control and profit protection throughout the life of the trade. let's explore a strategy tailored for traders who want to combine Zenith X with additional indicators as filters. The indicator that can filter signals for Zenith EX is PANA Kanal. By adding PANA Kanal to Captain, we can create the following strategy. Use the trade signals from Zenith X combined with the trend direction from PANA Kanal. In this setup, a buy signal is only suggested when both PANA Kanal and Zenith X are showing an upward trend, and a sell signal is only triggered when both indicate a downward trend. Now, while we explain the reasoning behind this logic, let's take a look at some real-time trade signals from this powerful combo right on the chart. Why choose PANA Kanal to filter signals for Zenith X? While Zenith X has a well-structured and methodical trend detection system, especially with its multi-timeframe confirmation logic and MA crossover, this also means that trend shifts can sometimes be delayed. The system tends to hold on to the previous trend longer, which can result in late signals near the end of a move where momentum is already fading. By adding PANA Kanal into the strategy, we leverage its ability to detect trend changes more quickly and react faster to market shifts. This allows us to filter out weak or late-stage signals from Zenith X and only act when both systems align in trend direction. This approach brings several key benefits. Filters out low-quality trades, avoids entries near exhausted trends, increases precision and trade confidence. Now, to see how effective this combination truly is, let's take a closer look at their signals on the King Renko 12-4 chart, where market structure becomes clearer and cleaner to interpret.